All right, guys, let's get down to making some money. I'm doing pretty good here, so let's keep it going. Power integration. The symbol is POWI. Let me tell you, these guys, it's a converter. They do a lot of power conversion things. Now, you look at that chart, you can see I'm trying to jump the gun a little bit, but I think it's going to break out. Now, fundamentally, here's the thing. They do power integration, mobile TV, smart meters, LED stuff, the LED drivers, lighting, also some electronic switching. Third quarter revenue was flat year over year, but the margins went up pretty nicely, over 100 basis points. Consumer now 36% of revenue from 34%. I like that the revenue is really growing. Here's a smart company, too. 23 patents in the last quarter. They've got 668 total. The company is poised to grow about 30% a year every year for the next 5 years. PEG ratio 0.74. It's bouncing off the 50 on this chart. If we can hold there, I think on the upside, you got room to 60. Long term, give me a year. I think this could be a $68 stock. I've played it a lot in the past, and I think it's oversold, Matt.
Well, you know, I look at it, you talk about that V shape. It has had two major Vs this year where it came down, shot back up. The problem is each one was at a lower high. If it closed above 54, we're there right now. major breakout for the stock. And the last couple of years, earnings really haven't gone anywhere, but they're expected to really accelerate in the next few years. If they hit those numbers, this stock is well above 60 into the 70s and 80s in the next couple of years.
I know you follow these names. These
right, and I always have, especially on the power side and the smart metering, the smart power. This is one that will do very well, especially because those that are their clients are doing well and they have the money to make that investment. And the patents are very important. There are large hedge fund investors that are just investing in companies that have patents. That's a whole area of growth.
You follow this one at all, Jim?
I looked at this a little bit. I mean, the demand is there, so I understand why you'd recommend it. A little worried about the commoditization of the products and the lack of pricing power, which is why margins seem to be somewhat stagnant. But I do think there is demand for these products.
So, like Jim, I would be concerned about that. I would, though, take a 5-year type of look on this and own it for a longer extended period of time and perhaps take a smaller position in one's portfolio so that you could ride out the volatility of the company.
I like that. I like that approach. It is, for me, a long-term idea. To Matt's point, it is volatile. We can kind of, this is one of these stocks that will creep up on you because I've been in it years. I've played it many times, and almost every time I've gotten out of it, a year later, I wish I hadn't gotten out of it, you know? So that's just where we are.
You succumb to the V shape.
Yes, I am. The V. V for victory, though, okay?